A very good morning to all of you. I hope everybody's safe and healthy. And this is your market update. Wall Street rebounded from early losses on Monday after New York governor said parts of the state, which has been the epicenter of the US coronavirus outbreak, were ready to open while other regions were very close behind. The gains were led by healthcare and technology stocks, with Gilead, Biogen and AbbVie each up more than 4%. Shares of Salesforce, Apple and Microsoft also rose by about 1% or more. In terms of drag of performance sectorally, materials, energy and financials were the drags in terms of sector performance. Treasuries were down and the yields were up. The 10-year was up by about 2 basis points and the 30-year was up by about 3 basis points, the 10-year closing at 0.71. Gold slipped a bit, closing at 1696. Oil, on the other hand, action again in the oil on the oil side of the market. Saudi Arabia said that it will cut oil output by an extra 1 million barrels a day for June. Now that will bring its production to about 7.49 million a day. That's the lowest in 18 years. Oil declined though, as doubts were expressed over Saudi Arabia's ability to implement additional pledged output cuts. The market is never happy with what it gets, right? So the OPEC Plus will now remove about 11 million barrels a day from the market next month, but it's still short of the daily demand reduction of almost 15 million barrels a day, which is estimated by IEA. Boris Johnson's government published a roadmap for easing restrictions. Britons should plan to wear face coverings in enclosed public spaces and prepare for a new normal to last a year or more. The UK government aims to allow shops and schools to reopen next month, with pubs coming in after the July 4th. In terms of flows, investors continue to pour cash into gold ETFs, with the 2020 inflows already exceeding any full year on record. So ETFs tracking the precious metal have attracted about 14.5 billion in less than 5 months, topping the 11.7 billion that flowed into funds in 2009. So the State Street's SPDR Gold Share ETF has taken in an additional 1.4 billion in May. So that's some serious inflow happening into gold ETFs. Another news that caught my attention was the fact that the US biggest car dealership chain believes a recovery is underway. AutoNation said that the consumers' desire to travel again and to do so in their own personal space is driving the industry's rebound. And the CEO, Mike Jackson, said the demand started to pick up in the end of April. That is your macro update. Moving on to equities, AMC jumped up 56% after a UK newspaper reported Amazon had discussed a potential takeover of the movie theater owner. Shares paid some of its gains following a report that the two companies went in talks. Rahul Bhatia, who is Indigo's biggest shareholder, is considering a bid for Virgin Australia via his Interglobe Enterprises. Marriott slipped after RevPAR plunged 90% in April. The adjusted EPS also fell short, coming in at 26 cents in the first quarter, missed a consensus of about 80 cents. Under Armour also's adjusted loss per share was wider than estimated. General Mills, on the other hand, raised its 2020 and fourth quarter outlook after a strong home food demand that they saw in March and April. ArcelorMittal plunged 16% after saying it will raise about 2 billion in shares and convertible notes as it seeks to cut debt and bolster its financial position. Earnings that we can look forward to is from Toyota, Honda and Daikin. We'll also be looking for earnings coming in from Allianz and Vodafone. In terms of rates and fixed income, the funding markets are a lot calmer. The 3-month LIBOR fell again by about 1 basis point, 0.1 basis points to about 0.4335. That's the 16th consecutive day of decline. On the CP side, which is your commercial paper side, 13 CP issues came to the market as of May 8th, with one offering the previous day, breaking a drought that has lasted since the March 26th. This is according to Fed data. And as for the cross-currency markets, major bases all sit around the same levels as 3 months ago. So all signs that the cross currency market as well as the funding market, the short term funding market, are all stable. The US commercial paper rates have also dropped, with the spread over the overnight index swap, which is a proxy for central bank rate, now roughly around the same, around the average seen in 2019. Even in Europe, the commercial paper activity has continued to increase, with higher volumes and longer tenors being sold. Lastly, to Forex, the dollar kicked off the new trading week stronger against all major currencies. But there's a lot of Fed speak coming our way. So first, Chairman Powell will be speaking on Wednesday. Aside from Powell, we'll hear from a number of Fed officials, including Bostic, Kashkari, Harker, Bullard, Quarles, Mester, and Kaplan. So, a lot of comments that I think will be scrutinized by the market. Today's inflation numbers also should show some kind of deflationary trends, is what Bloomberg Economics is writing. US deflationary trends are accelerating. Consumer prices probably fell by about 0.8% in April. That's what the economists are predicting. Twice as that of March's minus 0.4%. The core CPI decline may also widen to minus 0.2% from the 0.1%. Now, lastly, in terms of the Fed, I think a lot of we'll be looking forward to any kind of comments on these negative rates. So if you remember, last week Fed funds futures started pricing in negative rates in December 2020, but the yields popped back up above zero after the NFP data came through. For the time being, I think Powell would probably brush it off, but it remains to be seen as to what is the tone and how their approach is towards the possibility of more easing. That is your market update. Have a wonderful day, and I'll see you tomorrow again.